welcome to our second video on market outlook. Last time we discussed various indices and their valuation multiples, and that time Nifty was also hitting the all-time high. And here, this time we are talking Nifty has already close to 22,000. So soon we can expect 22,000 going by the current momentum. So Bank Nifty has also made an all-time high of 48,200. So both of the headline indices are doing quite well from last few weeks. So that's a good case for the investors. So during our last video, we discussed various indices, various sectors and their valuations. And out of that, we were very keen on the banking space. So in this video, we are going to dedicatedly look at how banking sector is well poised to beat the overall market, to beat the overall large caps space going ahead. So let's start. So first of all, we will start with the relative price performance of the banking space with respect to the Nifty. So there are two large categories or types into the banking space. One is of course, the private banks, and second one is the PSU banks. So here is a chart of private banks relative performance with the Nifty 50. So as we can see, the private banks index has outperformed the Nifty from 2006 to 2019. So from quite a long period, it has been outperforming. However, if you look at post-COVID era, the private banking space has not outperformed the Nifty 50. And that's why we are seeing this ratio chart towards declining down. On the contrarian side, if you look at the PSU space, that has been underperformer from year 2004 to the Nifty 50. So PSU Bank Index has underperformed Nifty 50 between the period of 2004 to 2020. However, post 2020, we have seen good performance from the PSU Bank Index. So these are the two rotations happen within the banking industry itself. So there are some reasons to this as well. So we will discuss those reasons one by one. So now let's get started with the Bank Nifty's valuation. So Bank Nifty's historical median price to book has been close to 1.9 times, and at present it is trading at 1.6 times. So it is very close to its lower standard deviation of 1.5 times. So the Bank Nifty at present appears frothless as far as the historical price to book is concerned. If we consider the Bank Nifty's earnings multiple, so P multiple is right now trading at 15.2 times, and the median has been 17 times. So it is more or less at par with the historical median. So both from both perspective, one is the price to book and second one is the price to earning. From both of this perspective, Bank Nifty is trading at very lucrative valuations. Specifically, if you look at the historical references to these valuations, where we haven't seen such kind of price to earning multiples for a considerable period of time before 8 years ago. So from 2015, the Bank Nifty PE has been above its median, and the same case with the price to book as well. So between April 2015 to 2019, the price to book has been above median. And at present, post-COVID, we have seen a good correction into that price to book. So to sum up this, both of these valuations, so price to book wise, we are trading on the below band of standard deviation, and price to earning wise, we are trading at near the median. So here is the case why banks may outperform the overall index going forward. So if we look at a previous 5 years, the kind of growth we have seen into their market capitalization is not in sync with the profit growth. So basically, the profits have improved at much faster pace than the market cap growth pace. So basically, traditionally, we should have a same growth into the market cap that a company witnesses into its earning. However, from last 5 years, that has been not the case. So here is a table where we have collected profit growth, market cap growth for 3 year and 5 year period. So if you look at the 5 year period, so the HDFC Bank's MCAP growth to profit growth ratio stands at 0.76%. So whenever this ratio is less than 1%, less than 1, it means the market capitalization has not improved at the same pace compared to the earnings pace. So there has been many instances at present where most of the private banks market capitalization has not improved with their profits growth over the last 5 years. So again, this makes a strong case for banks, and it presents a lucrative opportunity, undervalued pocket for institutional investors as well as the FIs. Similar case is also with the PSU bank. So, of course, this is not an apple-to-apple comparison with the private banks, because private banks has been private banks has been profitable for over the last decades. And if you look at the PSU banks, so PSU banks were making losses. They have gone through very tough cycles of asset qualities, and now that asset quality has started to improve. So many of the PSU banks have made turnaround in last 5 years. So to get the case, here is the case of State Bank of India, where its profit has improved by close to 23 times in the last 5 years, whereas its market cap has barely improved by 2 times. Similar case with the Bank of Baroda, where its earnings in the 5 year time span has improved by 17 times, and the market cap has improved by only 3 times. So overall, there is a big disconnect in the market cap growth and profit growth of the PSU banks. And not just for the PSU banks, for private banks, we have also just seen the similar case. And this is the summary of both of these things. So on a trailing 12-month basis, private banks have a net profit of 1,63,000 crores. Public bank, because of the lower provisioning and the tailwinds of rate hikes, where they got a chance to reprice the loans and good recovery into their bad debts, that has led to a improved profitability. And public banks cumulative profit is now at 1,40,000. So private banks profit is just 20% higher than the public sector's banks. However, if you look at the market capitalization, so private banks market capitalization is close to 31 lakh crores, and the public banks market capitalization is barely 2 lakh crores. So there is again a 3 times difference into the both of these market capitalization. So if this trends persist going ahead, then we can see a good amount of re-rating into the public banks, as well as private banks has also trading at good levels, which we just saw. And here is a glance over the asset quality over the few years. So this is private banks net NPA chart. These are some select private banks. So this is net NPAs of various banks from 2004 to 2023. So if you look at the period of 2016 to 2021, so this 5 years of period was very painful for private banks, where a lot of banks has saw bad quality in their assets, and that led to a higher net NPA as percentage of their net assets. So again, at present, as of FY23, there has been a good amount of correction into those higher levels of NPA, and we are seeing a good asset quality at private bank at present. Then if you look at the next part, so this is the PSU bank's net NPA. So PSU bank has saw more pain than private banks back in 2016 to 2018. In those period, NPAs used to be 8 to 12%, and now that has came below. These are in the range of 1% to 2%, 3%. So this is a very positive cycle through which the PSU banks has recently undergone. So valuation wise, banks are trading at good levels. There is a disconnect between the market cap growth and profit growth in a positive way. Thirdly, there has been a sharp corrections, positive sharp corrections into the net NPS, where banks have reported a very healthy assets quality. So these three are main factors which shall make a good case for banks to perform going ahead. We have also seen the relative performance with respect to Nifty, where private banks have underperformed post-COVID. PSU banks has been underperformer from 2004, largely underperformer, and their outperformance has just started from 2020. So uh, and uh, and if you look at the macro from the macro perspective, so foreign institutional investors has always been keen on investments into the financial space. So uh, as Fed has signaled three rate cuts into the next year, so it is expected to have a good amount of inflows from the FDIs in Indian equities, and at present such valuations and these there's good pointers into the banking space shall really make banking space a good investment opportunity. So this is our case for the banking space that which shall work to outperform the overall market as far as the banking space is concerned. So I hope all things are clear to all of you. Thank you and have a very happy weekend.